Hello everyone, welcome to my channel. Today I'm going to talk about vehicle expenses, how to maximize your tax deduction. Let's get into the video. When it comes to managing your finances as a business owner or freelancer, vehicle expenses can be one of the most significant deductions available. The cost of using a vehicle for business purposes, including fuel, maintenance, insurance, and depreciation, can add up quickly. However, understanding how to maximize your vehicle-related tax deductions require careful planning and record keeping. This video, I will go through the key strategies for ensuring you claim the most out of your vehicle expenses, the IRS rules surrounding these deductions, and how to keep your records airtight in case of an audit. Understanding vehicle expenses deduction. The IRS allows taxpayers to deduct vehicle expenses if the vehicle is used for business purposes. However, you cannot deduct expenses related to personal use. It's crucial to distinguish between the two and maintain meticulous records. There are two main methods to calculate vehicle expenses for tax purposes. One, the standard mileage rate method. The standard mileage rate is a fixed rate per mile set by the IRS. For 2025 tax year, the rate will vary. Be sure to check the latest IRS updates. But historically, it has been between 56 and 65 cents per mile. What to track? If you use this method, you must maintain a log of your business mileage, including the date, purpose, and the miles driven for each trip. What it covers. The mileage rate covers operating costs like fuel, maintenance, and depreciation. You cannot claim these separately if you use the standard mileage rate. Who should use it? This method is often simpler and ideal for those who drive a lot for business but do not have the significant vehicle expenses. The actual expense method. The actual expense method allows you to deduct the actual costs incurred for using your vehicle for business purposes. These expenses include fuel, repairs and maintenance, insurance, license and registration fees, depreciation, lease payments, tires, and oil changes. What to track? You must keep receipts for all vehicles related expenses and track the percentage of time the vehicle is used for business versus personal purposes. Who should use it? This method works best for individuals who use their vehicle heavily for business and incur high operating cost. Key strategies to maximize your deductions. To make the most of your vehicle expense deductions, follow these categories. These strategies. 1. Choose the right method. The choice between the standard mileage rate and the actual expense method can significantly impact your deductions. Calculate your deductions using both methods for the first year you use the vehicle for business and choose the one that gives you the highest deductions. Secondly, track every mile. Meticulously mileage tracking is essential, regardless of the method you choose. Use mileage tracking apps like Mile IQ, Everlance, or QuickBooks Self-Employed to log your business trips automatically. These apps can generate reports that meet IRS standards, saving you time and effort. Pro tip, always record the purpose of each trip. A vague note like client meeting might not hold up under scrutiny. Be specific, such as meeting with client X at XYZ coffee shop. The third thing is separate personal and business use. If you use your vehicle for both business and personal purposes, calculate the percentage of time it's used for business. For example, if you drove 20,000 miles in a year and 10,000 of those were for business, you can deduct 50% of your actual expense. If using the actual expense method. The next thing is to leverage depreciation. If you own your own if you own your vehicle, depreciation can be a significant part of your deduction under the actual expense method. The IRS will allow you to depreciate the cost of your vehicle over several years. Alternatively, you may qualify for Section 179 deduction or bonus depreciation, which lets you deduct a larger portion of the vehicle's cost in the year it was purchased. Tip for new vehicles. If you purchase a new vehicle primarily for business use, explore the accelerated rated depreciation option to maximize your deduction in the first year. Do not overlook small costs. Small expenses like tools, parking fees, and car washes can add up over time. While these are often overlooked, they are fully deductible if incurred during business use. Keep receipts of your tolls, parking fees, and car washes, or make digital records to claim them. Consider leasing versus owing. Leasing a vehicle for business use can offer different tax benefits compared to owning. Lease payments are fully deductible if the vehicle is used exclusively for business. If you use the vehicle for personal and business purposes, you will need to calculate the percentage used for business. Combined strategies. In some cases, you may benefit from combining deductions. For instance, if you use the actual expense method, you can still deduct tolls and parking fees separately. Understanding the nuance of what the IRS allows can be significantly boost your savings. Common mistakes to avoid. While maximizing deduction is important, staying with the IRS guideline is equally critical. Avoid these common mistakes. 1. Failing to keep detailed records. Without detailed mileage logs and receipts, your deductions may be disallowed in an audit. Always back up your claims with proper documentations. Second thing is mixing personal and business use. Claiming 100% of vehicle expenses when you also use the car for personal reason is a red flag for auditors. Be honest and precise in calculating your business use percentage. The next thing is forgetting first year rules. If you choose the standard mileage rate in the first year you use a vehicle for business, you cannot switch to the actual expense method later. Plan accordingly. Neglecting reimbursement policies. If you are self employed but work as a contractor, ensure you are not deducting expenses that your clients have reimbursed. Double dipping is not allowed and could trigger penalties. Tax preparation and filing tips. Work with a tax professional. Navigate vehicle deductions can be complex. A tax professional can help you determine the best method to use and ensure compliance with IRS rules. File the right forms. Use Schedule C, Form 1040 for self-employed individual to claim vehicle expenses. If you are an employee claiming unreimbursed vehicle expenses, use Form 2106. The third thing is stay up to date on IRS rates. The IRS adjusts the standard mileage rates annually based on inflation and fuel costs. Always check the latest rate before calculating your deductions. Tools and apps to simplify record keeping. Managing vehicle expenses does not have to be overwhelming. Technology can simplify the process. Mileage tracking apps like Mileage IQ, TripLog, and Everlance automatically track your business mileage and generate IRS compliant reports. Expense management software tools like QuickBooks and Xero allows you to categorize and track vehicle expenses along other business costs. Report scanning apps like Xpersify and Shoebox let you scan and store receipts digitally, reducing the risk of losing important documents. Finally, I would say maximizing your vehicle expenses deduction requires careful planning, consistent record keeping, and an understanding of IRS miles. By choosing the right deduction method, tracking every mile, and staying organized, you can significantly reduce your taxable income and keep more money in your pocket. Whether you're a small business owner, freelancer, or side hustler, vehicle expenses are an opportunity to save on taxes and improve your bottom line. If you're unsure about how to navigate these deductions, consult with a tax professional to ensure you are taking full advantage of the rules while staying compliant with IRS requirements. Thanks for watching this video and do not forget to subscribe to my channel.